everybody, it's Janice with Jaycoy Realtors, and I'm here to talk to you about inflation and home prices, so stay tuned. Inflation is rising and so are home prices. Should you buy right now? Last week there was a big jump with inflation, 4.2%. which is a jump that we have not seen in a while. And according to CNBC, the reason for that jump was at this time last year, the economy was hit with the worst of the COVID pandemic and inflation was unusually low. So when they make comparisons to a year ago, when the economy was slowing down and people were like pulling back in the overall economic scenario, in comparison to today, we're recovering from the pandemic, and that's a good thing. We want to see more businesses being able to operate at full capacity, and that creates inflation. What we have going on right now across the economic scenario is we have a supply and demand imbalance. We have a lot of people that want to buy a particular good, and supply is low. And in housing, that's certainly true. And in other businesses that haven't been able to bring capacity back for a number of different reasons following the pandemic, but now people want things and people are back out there and it's causing those issues. But overall, a very good thing. In terms of the real estate business, from Chief Economist Lawrence Yun, the National Association of Realtors came out with this 2021 Q1 home price report, and they're saying this: the record high home prices are happening across nearly all markets, big and small, even in those metro areas that long have been considered off the radar in prior years for many home seekers. A couple of key statistics that came out of that report: 99% of metro areas recorded year-over-year price increases. 89% had double-digit gains. So this is causing people to say prices are moving very, very quickly in the housing market. And I know some people have concerns about the housing market and about the rate at which homes are appreciating. So I want to give you what the top 4 financial institutions are saying to their customers about the market. JP Chase, Merrill Lynch, Goldman Sachs, and Morgan Stanley, they manage more wealth than anybody else in the whole planet. And they have a fiduciary responsibility to give their clients the best information about what's happening in the world of investments. So let's take a look at what they're saying. Let's look at what the experts are saying. JP Chase, from their Insight report, says housing prices have spiked during the last 6 to 9 months, but we don't expect them to fall soon, and we believe they are more likely to keep rising. If you are looking to purchase a new home, conditions now may be better than 12 months hence. So they're saying buy right now, because the next 12 months, it's only going to cost more. Those who remember the housing bubble of 2006 and 7 may be nervous, and they are, watching U.S. housing prices soar now. But the previous bubble was fueled by speculative buying, which we do not think is the case today. So JP Morgan is saying buy now because we don't see prices coming down anytime in the near future. If we take a look at what Merrill Lynch is saying, there are reasons to believe that this is likely to be an unusually long and strong housing expansion. Demand is very strong because the biggest demographic cohort in history is moving through the household formation at peak home buying stages of its life cycle. So what they're talking about here is that millennials, they're moving through the time where they want to buy a home and they want the benefits of home ownership. Not only that, but all the non-financial benefits of home ownership as well. So they go on to say, coronavirus-related preference changes have also sharply boosted buying demand. At the same time, supply is unusually tight with available homes for sale at record low levels. Double-digit price gains are rationing the supply. So what they're saying here is there's going to be a strong expansion going over the next few years. And the coronavirus has caused a lot of the people to look at home differently because we're using our space differently, from teaching our kids from home to working out at home and working from home. Goldman Sachs, they're saying that strong demand for housing looks sustainable. Even before the pandemic, historically low mortgage rates had pushed demands to high levels. Consumer surveys indicate that household buying intentions are now the highest in 20 years. As a result, the model projects double-digit price gains both this year and next. So interest rates are still historically low, and we saw a drop in the average 30-year fix last week. The average 30-year fixed rate is at 2.94% as recorded by Freddie Mac. And again, great long-term financing for homes, which is bolstering demand for houses. Morgan Stanley says, unlike 15 years ago, the euphoria in today's home prices comes down to the simple logic of supply and demand. And we at Morgan Stanley conclude that this time the sector is on a sustainably sturdy foundation. This robust demand and highly challenged supply, along with tight mortgage lending standards, may continue to bode well for home prices. Higher interest rates and post-pandemic moves could likely slow the pace of appreciation, but the upward trajectory remains very much on course. So what Morgan Stanley is saying here is homes are going to continue to appreciate. Maybe in the future, not at the rate at which they are today, but they don't see that going down. The last Morgan Stanley quote, we have a strong conviction that we are not experiencing a bubble in the United States housing. We are not at all suggesting that home price appreciation will maintain its current torrid pace. Home prices will continue to rise, but more gradually. So they're saying we're seeing a lot of appreciation this year. Is this sustainable? They're saying we're not suggesting that home price appreciation will maintain its current torrid pace, but it is going to continue to grow and prices are going to continue to expand. In today's market, coming out of the downturn of 2008, so many people said, I don't know if owning a home is the American dream anymore. We might just rent. So a lot of folks lost a lot of money, short sales, foreclosures, and all the things that we know happened back in the housing crash and crisis. It's been 12 to 13 years ago, and today we are almost seeing exactly the opposite happen. We're seeing more people want to buy a home than prior to the pandemic, and there's a lot of reasons for this. We're seeing optimism and a lot of people willing to pay over the list price of a home because they want this for themselves or for their family or for whatever reason their needs are, because it's coming from a place in the last year where we have educated our kids from home, we've worked out from home, or whatever the case may be for individuals or families making these decisions. But strong demand for homes across the country, which is very, very different from what we saw coming out of the last crash. So I hope all of this information helps you. And if you're thinking about buying or if you're thinking about selling, I want to make sure that you're educated on what's happening in the market. As always, I'm grateful for the time that you've invested to listen to this, and thank you for joining me, and I'll talk to you next time. You can always catch me on social media at Janice Allen Realtor or on my new website at www.michiganhomegirl.com, and I'll see you next time. Bye.